Hello and welcome to Core Finance. Happy Friday to all you viewers out there. I'm Matt Brown and I'm joined by a very special guest today, Ronnie Chopra, who is the author of Wall Street Wires.
How are you
today?
Good.
Good. Well, without any further ado, let's crack on. Markets are edging higher. Trump tax reform draws focus. Will he get the tax reform through, and how's he going to pay for it?
Well, that's the $64,000 question. I mean, obviously the US equity markets seem to think he's going to be able to do something. Whether he gets it through Congress or not, that's another thing. But for the time being, markets are going higher.
Continue going higher, do you think?
No, they can't continue to go higher, but the question is when do they start to fall sharply? I mean, like UK, the European markets, some of the Asian markets have come off quite a bit, but the Dow and the S&P and the Russell 2000 in the US, they all seem to be hitting new peaks.
Understood. Moving on, looking at ITV, a perennial bid target potentially.
It is a perennial target, isn't it?
What do you make of this company?
Well,
I mean, do you think a bid will ever come through?
I think on fundamentals, when you compare them with other media companies, TV companies, they are undervalued. And they were upgraded today, weren't they, by Barclays? They've come down from well above 200 pence to currently around the 170 mark, I think. And they've got a big shareholder in John Malone from Liberty Media.
Yes, and I think it's about 10%.
That's right, yeah, it is around 10%. And he's, mentioned in the past that, yes, he is interested in acquiring ITV at the right price. So that obviously is not going to go away. And if the shares languish at this level, they have underperformed the UK equity market somewhat over the last 12 to 18 months. Then, yeah, they probably will be acquired at some point. Again, the question is when.
Yeah, the problem is with ITV, obviously the advert revenue is going to reduce, and with the competition of on-demand TV as well.
Netflix and
Amazon,
Sky,
etc. Yeah. So I mean, as a case, it probably needs to happen sooner rather than later for shareholders. Otherwise,
I agree.
Otherwise, stock could go south potentially.
Well, no, but I don't think it can fall that much further because they still generate decent profits. And I think they're on a price earnings ratio of about 12 or 13, which for a UK media company is fairly, undervalued.
Well, Core Finance may snap them up as yet. Moving on to another stock, looking at LCG, London Capital Group, and we've also got a chart for the company as well.
They had results out yesterday, didn't they?
Yes.
Which they're still loss-making, but they're making good inroads into getting back into profitability. What astounds me is that the market value of this company is only £8 million. So the price of a reasonable house in London. They've also, they've got Stan Wawrinka as their face.
The tennis player.
The tennis player. And they think they've been advertising a fair bit on Bloomberg. They've increased the number of clients over the last 6 months. They've cut costs. They were based in Knightsbridge, weren't they, a while ago? And
yes.
I'm not sure where they've moved to now, but obviously they've cut costs. And an £8 million company sounds really low. Because I remember a few years ago, these are trading around 50 or 60 pence.
Yes, yeah.
So if they do get into, making money at some point, which probably within the next 12 months they will do, I'm astounded that the market value is only £8 million for a company like this, which is obviously quite well known in the city too. Everyone in the brokerage world knows LCG.
Understood. So maybe onwards and upwards for LCG, potential bid target as well. Looking at an index now, we're focusing in on the Nifty 50. So just talk us through the chart, if you will.
I've spoken about the Indian market, obviously being of Indian origin. I keep track of it, although I've never personally invested in Indian equities. Over the last 10 days, they've fallen 7 consecutive days. The problem with the Indian market is I personally think that on fundamentals, when you compare the market to other global indices, it's on a much higher price earnings ratio. And it's still a developing market. There's very little corporate governance when you compare it in the West with the US or the UK or Europe. And I find that the market is too high at the moment. And we've had a fairly decent correction, 500 points, 5% in the last week to 10 days. But I think it's got further to fall. The one big boost for the country at the moment is that with the demonetization which took place end of last year, a lot less cash transactions can take place, whereas people used to, when they were acquiring property, part of the purchase was in cash. Now that's not the case because of the Modi crackdown on so-called black money.
Yes.
And so that money, when people aren't buying property, they're buying equities domestically. But overseas investors have, over the last few months, been cutting back or reducing the amounts of purchases in the Indian market. So you've got that kind of counterbalance taking place. The other thing why the market is relatively high is because of the demographics in the country. They've got a very young population, whereas that's not the case in places like Japan, which is the opposite.
Yes.
And the young population, obviously, they've got the disposable income. Incomes are rising there, and so they're spending. And so there are sectors out there that should benefit from this. But at the moment, I can still see the Indian market drift a little bit further.
Understood. Seller for choice. Let's have a quick look at the currencies. The Great British Pound, 133.92, below the 134 handle.
Yeah.
Some weak GDP numbers out. And Euro dollar, 118. So it's got above the 18 handle. You've also brought a chart along for the Euro dollar. And
yeah,
just explain, bit of weakness of late. Where do you think it can go from here?
I think, obviously we had the German election. And the results weren't too favourable for the equity markets and for the FX market. I mean, so the euro has weakened since the Sunday, when it was trading just above 120. So we're back to 118. A lot of people are saying that the euro is going to go to 125, maybe 130 against the dollar. I don't see that happening at the moment. I see more downside. Also on Sunday we have the referendum in Catalonia.
Yes, important.
And that's not been factored into the currency markets, I don't think, and also not even to the European equity markets. So there could be a surprise there. I mean, at the moment, the opinion polls say that it'll probably be a no vote, but
we've been here before.
We've been here before with many things.
Referendum,
Trump,
yeah.
And even I suppose even the Theresa May election was too close to call. So, is there going to be more populist movement on Sunday? We have to wait and see.
Fantastic. And moving on to the core number, 2510 or 2,510. This isn't the year that all the debt is paid off and we get back to normal in the markets, finally see interest rate hikes. This is actually the level of the S&P. And does it? You spoke at the top of the show. I mean, does it astound you that we're still at these levels?
I think the thing is, at the moment, people have to park their money somewhere. So with relatively low interest rates at the moment, and there's still a lot of liquidity in the market, and people are still buying US equities. Personally speaking, on historic levels, the market seems high. And a lot of well-known billionaires have said that, the market is high. The likes of Michael Bloomberg, Carl Icahn, even I think Warren Buffett is not really interested in acquiring any companies. So, there is that kind of over-exuberance, overconfidence in the market currently. But, these bubbles get bigger and bigger. But
and then they pop.
Yeah, but personally speaking, we could get a 4-5% correction in one day, which we haven't had for a long time. And also, October's just around the corner. And everyone remembers 1929 and 1987.
Yes.
So
watch out. Watch out in the market, stay safe. Finally, just briefly, anything jumping out on the economic calendar for you?
When Carney speaks, obviously he likes to move the pound a little bit. He doesn't know which way to go.
Down, yeah.
But apart from that, it's quite a busy Friday in terms of economic data coming out. So, just ahead of the weekend, be a bit of volatility, no doubt, later on.
Good stuff. Well, on that note, Ronnie Chopra, thank you very much for joining us on Core Finance today.
Pleasure, thank you.